Good evening, guys. Happy trades. I'm here to bring you a full breakdown on US30, gold, Bitcoin, and the DXY. So, without further ado, let me get right into it. So, looking at US30 on the monthly time frame, the first thing I want to do is just look at some very key levels. So, right here and here are the first points that interest me simply just because, and this is extremely basic, but we have price making a higher high, higher low, maintaining this previous area of support, which I can mark out, but it's not really important to where we currently are. We have a higher high breaking above this previous point, and then we can see price came down and retested it. Semi around where COVID-19 and everything started happening, that's where price ended up descending right back down to this broken level of resistance, found support. We even see that the monthly gave us a bullish wick fill candle here. So, and we also retraced off the 50 EMA, and I'm sure that if we go ahead and add for even more confluence, looking from the high to where the push started here, price also retraced 50% retracement. So on top of price action, we also have slight indicator extra confirmation here that price wanted to go ahead and remain bullish. So obviously just off the monthly time frame, we can see that price is very, very bullish. When we go here to the weekly time frame now, right, to look at the data in a little bit more detail, right, because obviously you can see that the monthly candles and weekly candles are giving us two different pictures. That we can see that in the weekly here, price has given us this very clean downtrend, right? And we can see that price is attempting to break out of the trend here, but we've maintained this area right here as some very strong selling pressure. And let me actually go ahead and make sure that this is marked out as a monthly. This is going to be marked out as a weekly, monthly, because we don't want to go ahead and mix up our key levels here. All right, cool. And let me also mark out this area on the weekly time frame, because this is a very key area of buying pressure right here. Let me see, also looking to the left here. So we can go ahead and turn this weekly. Whoops, I did not mean to put an alert there. Okay, cool. So we can see here that price has been attempting to break out of this downtrend. Let me go ahead and grab my path tool. Point A, B, C. Price breaks out, is retesting. D is retesting C, and as long as this area gets maintained as resistance, we have selling pressure to go back to these lows. If we can go ahead and find price pushing back above 34,259, that key area on the weekly time frame that we've been holding as resistance, then we have clean traffic up to 36,358, which is the all-time highs. Now, with that being said here, and now that price is a little bit more developed, I actually see us being in a potential inverted head and shoulders here just off of the weekly time frame, right? We can see that price has been, since we've been breaking out of this trend line here, we're also now trading above the 50 EMA, right? And we can also here, we have a potential inverted head and shoulders, with this being the shoulder, right? This being the head. And then right now, if we maintain this area as a shoulder, right, we have a very high probability that price can go ahead and break above this key area. And if that goes ahead and happens, we can go ahead, and the conservative entry would be to wait for the retest of 34,259 and then going ahead and looking to buy to fill this range. Now, could you look for an entry down here? We'll get to that. We're just looking off what the weekly time frame is telling us, but just off the monthly and the weekly time frame, we have a lot of information of where overall price wants to go. Not only that, there's extra confluence here for the buying pressure. If we go ahead and look in between this high and this low, right, we pull up a bullish fib setup. That price has also pulled back, 50% of this overall range, right? Again, also maintaining above the 50 EMA. So pulling back 50%, trading above the 50 EMA, and potentially giving us an inverted head and shoulders just off of the weekly time frame. So far, the monthly and weekly are lining up to be bullish, right? Let me go down to the daily time frame, right? So we can see that in this key area range between these weekly time frames, there's a lot of buying pressure, right? So I'm actually going to go ahead and go back to the weekly, and I'm actually going to turn this area to a box here. Cool. So that's that key area of weekly and daily buying pressure, right? That you see that every time we've come down to that area, and based on the daily time frame, you see that price has found support. Yes, we broke through, but then we ended up breaking back above, and now we're coming back to that same area that has been maintained as support before, right? And now based off the daily time frame, because we have a little bit more detail than compared to where the weekly time frame was looking, that on the daily time frame here, we really have this key level here that I'd be looking at to be held as support, right, for price to go ahead and break back above. And let me go ahead, daily. And the reason being is if this is going to be an inverted head and shoulders for one, right, we see that price has the shoulder, the neckline, the head, the neckline, coming back to that shoulder price. Now, this is a key area. This is a higher low point. I'm sorry. Yeah, this is a higher low point. Because if price can go ahead and maintain this area, this is a higher low on the daily time frame, right? It's okay that price can break down under here as long as we can break back above, right, 33,441 on the daily time frame. Because you got to look at structure for what it is, right? If I go ahead and pull up my path tool, you'll see that price, I mean, it should be clear with the naked eye, but we had a lower low, lower high, lower low, price went ahead, broke back up above the previous high, right? So if we can maintain that area of support, it's a higher low point. That's the thought process here, right? But we can see that price has broken a little bit below there, but we are still at that key area of buying pressure, right? So buys are still valid potentially here. Let's go down, and actually, if we go ahead and within this range as well, between this high and this low, see price has pulled back 50%, also within that same area of buying pressure, also rejecting our weekly levels. So very, very added, I don't want to say the same thing over and over, but just a lot of confluence in this area for buys. Going down to the 4 hour now, right? Let me just mark out some quick 4 hour structure here. And I'm only going to mark out 2 lines just because these are the only ones that we need currently. But you can see here, based off of the 4 hour, that now 33,038 is now our key level we want to pay attention to, right? Now we see that we came into that key level of buying pressure. Obviously, we ended up coming back to retest this broken level, because on the 4 hour, right, you can see that price went ahead and made a lower low, a lower high, right, and then made a lower low. So if price ends up rejecting this area, it's just going to be a lower high, and we can see price come back and tap into this buying pressure one more time. This would be ideal, and then we could potentially look for longs, right? Also considering the fact that between this drop down, so between this low and then this drop down, price has pulled back, 50%, is also retesting a lower high point on the 4 hour, and is also trading under the 50 EMA. So this would be a clean point of sells if held as resistance, just back down to this key area of buying pressure off the weekly and daily time frame, right? Because if we can come back down to this key area of buying pressure that we've identified on the higher time frame, then we can go ahead and get another potential buy opportunity that we can go ahead and swing. Now let's go ahead and consider the possibility that price doesn't want to go ahead and come back down to this key area. Let's consider the fact that we possibly may have missed the prime entries here. No need to fret. All we'd have to do is wait for price to go ahead and push wherever it wants to push, and then pull back down to 33.038 and wait for buying pressure to be held, right? Because if so, this was nothing but a liquidity grab. So if we can go ahead and just make a higher low point here, that is valid for me to go ahead and take the buys. But again, ideally with the current situation that I'm looking at, it seems more probable, again, market open could completely change that idea, but it seems more probable for us to come back down roughly to 32.595. Right, that would be extremely ideal, right? Taking it down to the 1 hour here, right? And unfortunately, I ended up missing this move just because I was a little bit late to my charts. But you can go ahead and see that price created this stupid clean breakout trade that came back and retested that broken 4 hour level, right? Because if you understood that, okay, price came back down to this key level of buying pressure, we broke under this 4 hour lower high, right? So if we're at a key level of buying pressure and we just broke out of a key level, it's a high probability we have to come back up and retest that key level. And that would have been your trade right here on that retest. This would have been a counter trend trade, but that was over 500 points. You know, that was a really good trade. You know, and you can see here that at market open, that's when it went ahead and gave you this stupid clean move. Literally market open came and broke out of that trend. Right, so if you just showed up at 9:30, right, you saw that price went ahead and won. We're now trading above the 50 EMA on the 30-minute, right, which is where we're primarily looking for our entries. We see that price has been respecting this 30-minute area of buying pressure, right? Also giving us a little liquidity grab to the low, retesting that key level on our higher time frame. We can see that price went ahead and gave us a very clean 50% retracement here at market open between this little range, between this high and this low. Again, also 50% retracement on top of our EMA. So really good. You could have gotten an entry slightly before market open at 8:30, you know, but that would be breaking my personal rules, but that entry is valid. But then you see at 9:30, the buying pressure went ahead and came in. You went ahead and you would have had to take an impulse entry the second it broke above that high, stop loss above the low, taking it to that 4 hour area, right? And if you wanted to hold a runner, you could have caught at minimum, right, 180 points to roughly 300 points by risking 58. So, you know, that could have been either a 1 to 3, which is an amazing risk reward, or as far as almost a 1 to 5.5, 5.25 there. So really good RR. But overall, next week, we'd like to see price go ahead, come back to this key area of buying pressure. If we can maintain this area as resistance, right? Just to give the visual. And then I would like to see the buys kick in, right? It is a possibility that we go ahead and break under here, sell, but I shouldn't say I'm only, but primarily I see the buys being higher probability, being that the monthly, weekly, and daily are all in sync with bullish momentum. It only makes sense for me to go ahead and look for buys, at least where we are in current market here, right? And again, if we missed this pullback here, simply wait for price to give us a pullback of this key area here. Nothing too complicated. Just show it for New York session. Be patient. All that good jazz. So now let's get into the next pair. Let's get into gold. Right. So let's mark out some gold monthly time or monthly levels here. Sorry, you guys probably hear my pug snoring in the background, but some really key areas here on gold. Alright, cool. Going down to the weekly time frame. Honestly, I don't even think I need any. I'll put I have one weekly level here that I can see that I would like to place, but honestly, that may do it for key levels right there, just using those monthly and weekly levels. So let me just go back here before I go ahead and just start yapping away. So what I see, one, we're at all-time highs. Just general rule of thumb, you want to sell at highs, you want to buy at lows. Now understand that the monthly time frame is at all-time highs. So one, I do see a potential head and shoulders pattern. It doesn't have to play out. This is one of the most basic patterns that almost anybody should be able to, everyone should be able to identify. We have a very clean potential shoulder. We have the neckline slash pocket. Then we have price breaking above the shoulder level. We have price came back, retested the shoulder level, but we also are creating this double top right here, right? And honestly, let me get rid of this because that's going to confuse people. But price went ahead and took out the previous high in this move here, giving us, right, this double top formation. Hell, you can consider it a triple top, right? So if price ends up respecting all-time highs and we get a clean break under, and you know what, let me mark out this level here too, just to be a little bit more exact, because it's more precisely here that I would like to see. So if we can break under 1705, right, and we can make a lower high under here based off the monthly time frame, we have a huge shift in structure, right? This is the area where price would have to go ahead and find selling pressure for me to go ahead and be convinced that I can go ahead and look for sells back down to this key area here. You know, I possibly could take it a little further to here, but I'd feel more comfortable just closing those long-term swings at this key area here, roughly like 1200 per ounce. But yeah, but all-time highs at gold, you want to be careful looking for buys here. Now, looking at the weekly time frame, right, we still have a potential for bullish structure on the weekly time frame. Now, I did end up calling sells off of this key area, off of 1974 down to 920. If you guys are in my free section, or if you guys are in the Havoc Trading Team chat and you're not a lifetime member, you at least in the free chart markups had the opportunity to catch this sell, because I called it days ahead of looking for sells if we can maintain selling pressure under 1974, and then we have clean sells down to 1920. Obviously, we'll see that a little bit more clear in the smaller time frames. But just off the weekly here, we see that price is still producing bullish structure, right? We have a higher high, a higher low, higher high. If price respects this area, this could very well be a higher low, and we come back up to the highs once more. Now, if price doesn't hold at 1920 as selling pressure, then I can start looking for the descend down to 1824. Now, 1824, based off the weekly time frame, is really that key area that I need to know that we're going to go ahead and break below to roughly 1640, and I'm going to mark this out on the weekly time frame here. And the reason being, let me mark this out. So the reason being, this is that key point. Again, this is just simple basic structure. Price was in the uptrend of, right? I'm sorry. First we were lower low, lower high, lower low, lower high, lower low, breaking above the previous high, right? Making that higher high, higher low, higher high, higher low. Now, if price wants to switch this trend officially, we have to break under this previous higher low point, which is here. That's if this doesn't set one. If this sets one, this could be the next major point where we break structure. But if price ends up just falling through here, this is that key area which will determine if price will, on the weekly time frame, continue bullish or go bearish, right? That's only if we don't find support here. We 100% can find support here and then take out the all-time highs. And then we still just have to be patient for potential sells, but buys would still be in the mix, right? So based off the monthly time frame, we have to consider sells because of our all-time highs. But in the weekly time frame, we are still bullish, right? Even the monthly is still bullish, even though we're sitting at all-time highs. It hasn't given us just yet confirmation that sells are going to kick in. So you don't want to go ahead and jump that gun. You want to wait for that proper candle confirmation and structure shift. So now we understand that 1920 is that key area that we're looking at. When we go ahead and go to the daily time frame here, right, you can see that price gave us a very clean double top off of 2034 here, right? Essentially the all-time highs, right? And then you can see we had that very clean structure shift. Again, and this is what I mean. That's what I said before of you're going to see the move that I called a little bit more clearly. But again, sent to my team, if we end up treating 1973 as resistance, we have clean traffic back down to 1920 at minimum. At minimum. Let's go here to the 4-hour time frame, right? We can see that in the 4-hour, right, off that exact area that I called, price created a double top. And something to note about the EMAs is they are here to help with timing, right? Timing of your entries, and I really like to only incorporate them for entries on the 1 hour and below. It's quite rare that I'm taking a 4-hour entry simply because most times I'm not trying to swing trade like that. It just doesn't fit my criteria. It doesn't fit my trading plan. It's not me. Unless like it's a setup that I see that is really developed long term. Most times I just don't swing trade. But regardless, 1 hour and below for timing, right? Because we see that, yeah, price came back to that key area here. We came back down respecting this 4-hour area of buying pressure, right? Which we can go ahead and mark out here. 4-hour, right? You can see that in the 4-hour even gave a very, very clean move. But the EMA gave you perfect timing right there. And then again, once more on the 4-hour, the 1 hour now, right? We broke under that 4-hour level of support, found resistance, and you can see it also along with the EMA, it gave us a clean rejection. So stupid clean moves have been happening lately. And then we could actually go ahead and mark out this 4-hour low now. And it's as simple as let me mark this out. Right? Again, still looking for that descent down to 1920. It's really as simple as you could just look for a move breaking under 1939 now on the 4-hour structure and then down to 1920. Now, when I'm marking out my key levels, I don't like to mark them out past the 4-hour. I don't want my charts really that crowded. If I have to, it's most likely just going to be a box. Not saying I don't use the rectangle tool for higher time frames as well, but it's more common. I just use a line. Just to keep things clean. Less clutter on the screen. That's how I like it. Right. And I could also draw this potential scenario too. Because we could pull back up to this area of selling pressure one more time. That is a possibility here. But pretty straightforward on gold, right? Either 1920 is going to be held as a support, and then we are going to go ahead and come back up to the all-time highs, or 1920 is going to just be failed to be held, and we could find selling pressure under it, and then we can come back down to 1824, and then at 1824 we will then assess the overall direction. Same with when we reach at 2034, right? 1824, yeah, and then at 2034. 24, Jesus Christ, tongue twister, trying to say it really, really fast. Regardless, both these key levels are going to be very key defining points on where we want to go ahead and travel. Now, on to the next pair. Bitcoin. A lot of people's worst enemy right here. So, obviously, hopefully you guys are getting the gist of the process here. Marking out some monthly key levels. I really do think crypto looks really clean despite a lot of opinions, if you will, on it. Alright, cool, I really like that. So, not going to put a whole lot of monthly levels. There's not a whole lot I really want to pay attention to besides this. Bada bing, bada boom. So you can see that price has get broken above this key area here on the monthly time frame, but we haven't yet to come retest that candle close of 13,000. Do we have to? No, but there is a high probability, and stay with me here. So obviously, price ended up giving us that beautiful push that everyone experienced in early 2020, right? And then end up crashing later in 2022. But we had the spike, the dip, right? Give us that clean double top. We broke so under this previous higher low point, right? And made a lower low here, right? So if price creates a lower high, I would very much like to see price come back down to 13,880, right? And then from there, I would really want to determine whether if price is going to go ahead and find support, make the great recovery, or if price is going to go ahead and find resistance and go back down to where it belongs. No, I'm totally kidding. Where it went ahead and started. Right, and then actually in this case, I do have to mark this out right here because this would be that key area that I'd be looking for. Cool. So that's just my thoughts on the monthly time frame. Now let's go down to the weekly. Now we want to go ahead and see price retest 35,037 because then from there we could see if we can come back and get that retest as just talked about back down to 13,880, or if price will go ahead and find buying pressure back above 35,000, and then we'll just go ahead and see all-time highs again, right? Nothing too crazy. Now, looking at the weekly time frame, you can see that price, obviously, we descended here very nicely, but then we end up having the structure shift that happened very recently, right? We can see that price was in this downtrend, and price broke above this previous lower high point, found support, right? And then now we broke above the high of this little range here, right? Finding support. I don't know why I'm marking out in boxes, not my normal lines right now, but regardless, this is what I'm looking for, right? We can see that price again was making lower low, lower high, lower low, broke above the previous lower high, right? Made a higher high, higher low, higher high. If we can maintain this area of support, this is a higher low, and then we can see a nice push back up to 35,037, right? And also just added confluence and looking right in the spot, we are pulling back roughly 50% here, because if you see pulling this from this high to this low, right, a 50% would also be the same key area of structure, and also roughly still trading above the 50 EMA, which is always nice to see. Going down to the daily time frame here, right, you can see that for us to even reach this key area that we want to see retested of roughly 24,800, just to give us that clean number, that price on the daily time frame is actually got to go ahead and stay under this lower high point, right, roughly 27,142, because reason being, it's simply that price has been maintaining that area as buying pressure. You can see that, you can see support, but we're actually been using that area as resistance, and we're also trading under the 50 EMA. So this is starting to give me signs that we can get that push back down again to roughly 25, I'm going to say 2,500 flat, to be honest, to give us that nice clean number. So 2,500 flat if we can go ahead and stay under 2,700. So that's roughly like almost a little over a $2,000 move on Bitcoin, right? But if we can end up holding 2,500 in this overall area of buying pressure, going back to the weekly time frame, that's a higher low point, and we can see that we'll have a very clean move back to 3,500. So that's roughly a $10,000 move on Bitcoin. That would be really nice to see. Again, it's just that retest here, boom. Now, let's say in the event price doesn't want to hold this area. Well, okay, then we're then stuck with the scenario that price has this range to go ahead and fill immediately, right? We'll go ahead and retest this area potentially after respecting 13,880, right? Because I pointed out on the monthly time frame, we have yet to come back and retest that area. Based off the weekly time frame, yeah, it really does look like we went ahead and retested this key area because you see that price had a little liquidity grab under it. But price could fall back under the 50 EMA, not hold this area as support, right? Make a higher low, as a lot of people could be seeing, right? Because like this, not holding this as a higher low would just destroy a lot of people's emotions, because they're like, oh, it has to make a higher low, it has to. It absolutely does not. You have to be prepared for both situations, and that's why you see on every single chart that I break down, I'm drawing out multiple situations that could happen, so you're prepared. You should never go into the market being like, okay, this one situation has to happen, because then when that expectation doesn't, you're not prepared for any other situation, right? Flow like water, my friend. Be like Bruce Lee. Come on now. So, pretty simple on Bitcoin. If we end up keeping 142 as resistance, we have a clean move back down to 2500, and then from 2500 we're either going to get buys up to 3500 or sells back down to 13880, right? Nothing too complicated, but it will require patience. You don't want to go ahead and try jumping the gun on any of these moves that I'm going ahead and showing you guys. But just know that the 29th through the 31st, I believe that's correct. I'll have to double check myself, but I am holding a 3-day mastermind, right? And I'm gonna actually check the calendar right now because I don't want to misspeak. Yep. So the 29th, 31st, I'm holding a 3-day mastermind where you guys are going to be able to live trade with me every New York session. So that's 9:20 Eastern Standard Time. We'll probably be on for like roughly 2 hours every single morning. And then later in the day at 5 p.m. Eastern Standard Time, we're going to start each day's mastermind call. And it's going to be extremely tailored to you guys. First day is really just going to be introductions, going to be very simple structure. And then the next day, we are going to be very intensely training you guys. I'm only going to have limited spots for this because I really want it to be intensive for you guys learning. I don't want to be, clustered trying to talk to a bajillion people. So get your spot while you guys can. The value is going to be insane. Just had to throw that in there. Shameless little plug. Let me go ahead and break down the last pair that we're going to be looking at. It's not really a pair. It's a dollar. The dollar index here. Where do I see the dollar going? Now, dollar is actually a very, very clean structure right now. I'm not going to lie to you guys, right? So marking out some monthly key levels. And honestly, I'm only going to mark out 2 key levels on the monthly time frame because that's all I really want to look at here. Not that I personally want to look at, but this is the most important piece of information that I got to look at in this current time, right? Because it was very clear that price went ahead and made a higher high, right? Made a higher low, which it's been respecting that higher low point, right? Then we went ahead and made a higher high, breaking above the previous high of the range. And now if we can maintain that as support, we have a high probability of filling this range here. So the dollar may have a potential like 10, or as of right now, yeah, roughly like a $6 to $8 gain here that we can go ahead and see. Because, okay, so on the monthly time frame, right, it's a simple break and retest. And then looking at that key area that we want to be seeing held as support just off the weekly time frame here, you can see that we're actually getting a very clean double bottom, indicating that the buyers are still holding some buying pressure. So looking at this area here off the daily time frame, we can see here that this is that key area that we need to be seeing to switch. Right, if we can go ahead and find support roughly above 105, and let me go ahead and mark out one of my key lines here so we can get that exact number for you guys, because I really want to see, yeah, I like that. Let me go ahead, daily, so 105.49, that's going to be our key level that we want to go ahead and pay attention to go ahead and either find resistance, which I think is a lower probability due to the monthly time frame retesting this. And also, if in 4 days we can also close the way we are, I want you guys to like engrave this candle formation in your head the way it is exactly right now, because this is my bread and butter, right? At 9:30, when I see this candle set up, right, I take this almost every single time. Ignore like the pit size, the pip size, the point size, ignore that, right? Every time I see this candle formation, this is my bread and butter. Now, there's 4 days until this monthly candle is closed, so this hasn't validated itself. This monthly candle fully could just flip. But, right, let's just say that we're on the 30-minute time frame. The candle closed exactly like this. This is a candle I will never, ever, ever hesitate to go ahead and take, right? And let's talk about it real quick, right? Because it's a wick fill candle. And some people are like, well, Dale, why would you take that candle? The same candle, Dale, happened right here. No, it didn't. It's completely different from right here, and I'll tell you why. This is a valid wick fill candle. This is not. Right? What's a wick fill candle? Is when the candle goes ahead, it not only engulfs the previous candle, right? Engulfs the previous body, which a lot of people know as an engulfing candle, because I will say, this is a valid engulfing candle, 100%. But did it break above the previous wick here? No. The engulfing candle did not break above the previous candle. So in other words, it wouldn't have fit my criteria, and I would have had to wait for the next candle. If the next candle could have flipped and closed above the previous wick, I would have taken that entry. But notice how the following candle couldn't even break above that wick. So just knowing that alone, it completely avoided a loss there, right? Now, this candle, it broke above the previous body, and it's breaking well above the previous wick. That is the valid criteria for a wick fill candle right there, right? And most times I really do just put my stop loss at the body, not the wick. That's really strong momentum indication here when I go ahead and see this candle. Hell, if this closes on the monthly, and even if we close a little bit higher above this range, it would still count as a valid wick fill as long as we break above this previous high here, which again, we are more than doing so right now. Right, so like here, let's go back to US30, because this dollar breakdown was extremely quick. We're either going to go ahead and find resistance on 105 and then come back down to this key area of buying pressure, which then will assess whether if we're going to go ahead and continue bullish back up or break back under this key area of roughly 102, 210 and find resistance. But I think this is a lower probability of happening due to current market conditions. I think that it is a higher probability that we end up seeing this. And I'm sorry. Here on the daily here, here's another one. Here's another wick fill candle, right? So we can see that on the daily here. One, we have this imbalance right here, which is ugly as hell, right? And by imbalance, I'm simply talking that the fact that this candle, right? Notice how it did not open where this last candle closed. It opened completely different, right? Just some simple manipulation there. So price went ahead and came back down and wanted to correct that move, right? And actually, it just wicked out the end of that low here. Because if I go ahead and mark out this low, you can see that price just with the wick went ahead and took that out. But we also had a different form of imbalance. We had a gap right here, which also eventually had to get filled. But right, you can see off the daily time frame that price came back down to this key area of buying pressure, and then you could see that price ended up giving a bullish wick fill candle here. Right, here's that confirmation candle, because you could see price broke above that previous wick, which was here. Oops. Stop loss could have been under that low. And then so again, looking at the criteria that we were looking at, we want to see price overall, yes, take out this high. But if you're going to try to swing trade this and you got an entry down here, it would make the most sense to go ahead and take partials here. And actually, there's also a daily imbalance right here on the DXY. So even more confluence for price to come back up to this key area and most likely continue that momentum. That's a very, very clean gap right there, as just explained here. Gaps always fill, just never try to say when. Just wait for that momentum to truly start moving towards them. Don't try to force a gap. Wait for the momentum to start moving in their favor. Yeah, there's a daily gap here, so you have a more probability to go up to here. I'm not really looking to take a trade inside this range here in between 105, 106 and like roughly 101. Not interested. I want to break above 105, finding support, and then we continue going up. That is my ideal trade for the DXY. I hope you guys enjoyed this video. It's roughly going to be a half hour long, but I didn't want to hold any sort of sauce back. I really wanted to give you as much value as possible. I really feel like this is the video that I wish I had when I first started trading, and I wish somebody broke down structure, the way I'm looking at it. Keeping it simple, not trying to make it fancy, just look for price action, read it for what it is, and just be patient for your setup, guys. Again, hopefully you enjoyed this video. See you guys in the next one. Peace.